So a mortgage application that's a little bit different is where you're going to build your own home. Okay, it's generally by the banks called a self-build mortgage. And that doesn't mean you're building the house yourself. It just means that you're not buying a finished property. You're undertaking building a house on a site. It doesn't differ greatly at the start. Application is very similar, but the other things that you need to have at application stage would be your site, either bought or gifted to you, your planning permission in place, not final planning permission, but again, the first grant of planning permission, and then costings. They're going to be rough costings at this stage, but your architect, your QS or your engineer needs to have given a rough costing of what it's going to cost to build the property. Once you move to loan offer, that's going to be final costings. They need to be much more detailed. The builder needs to be on board with exactly what those costs are going to be. And that's what you'll need at loan offer stage, different to standard. And then the main difference is at drawdown. So if you're approved for a mortgage of 300,000 to go and build a house, the bank are not just going to pay across the 300,000 and hope you build a house. It's going to come to you in stages. It's called stage payments. And basically the builder goes in, lays the groundwork, and the start, it costs maybe 40,000 euros. The architect or the engineer signs off that it's been done, the work is to standard, and the bank release the first 40,000. The second phase is maybe 100 grand. The architect or the engineer inspects it, says it's been done to standard. The bank release the next 100,000. Okay. In terms of your payments, when you draw down the first 40,000 of the mortgage, you're paying your repayments are based on that 40,000, and as it slowly goes up and up, your repayments will go up until you've drawn down the whole thing. One important caveat with the self-build mortgage is that the final 10% of the mortgage will not be paid out until the house is finished. So the valuer goes back, sees the house, sees that it's finished. It doesn't have to be finished in all your furniture in, all the rooms perfect. It just has to be livable in, and then they'll release the final 10%.